Welcome back, and joining us for a look at the equity space is Andile Buthelezi from Sentio Capital. Thank you so much for your time, Andile. Quite interesting moves that we are seeing there, particularly on the JSE, that has extended the green trading that we have seen throughout the week. US markets really mixed, but they have actually been, I think, green for the most part this week, and those markets across the Atlantic also trading in green territory. I don't know, would you maybe say that the markets have been somewhat resilient this week or not?
Yeah, good morning to you. Good evening rather to you. Look, the global markets in general have been on a 4-day positive trend. A large part of that does have to do with the number that we saw on Friday.
Yeah.
And the irony, of course, is that that number that we saw on Friday was a bad number in terms of the fact that the jobs number came in below expectations. What it meant for the market is that they started to price in an increased probability of interest rate cuts coming through this year. So you did see a little bit of positivity in equity markets because of that. Today, maybe taking a breather on the US front, at least, maybe a little bit of profit taking, but also maybe a little bit of realization that even though we saw a weaker than expected jobs number, to be honest, the inflation number is not quite where the Fed would like for it to be yet. So even if the jobs number was weak, there's no guarantee that they're going to now go and cut interest rates. So a little bit of caution is advised. We are still also in the middle of earnings season, and you are seeing the likes of Uber that you mentioned earlier on, of course, taking quite a bit of a smack today. I think it's down about 8%
Yeah.
now. That's market expectations. So the Fed speak is definitely something that's driving global markets alongside earnings releases.
Yeah, definitely one eye there on what Fed officials are coming out with, but also the earnings. Let's take a look at AB and Bev, really, something that the markets liked over there, releasing their Q1 results, coming out with an earnings beat there, a growth in revenue, core profit, all the way down to the bottom line, but a slight decline there on volumes. Of course, we did see the share price surging over 5%. A cause for cheer?
I think so. And if share price performance is anything to go by, then the market definitely agrees. The share price did finish about 5% higher on the day. You did mention a slight decrease in volumes on an aggregate basis. A large part of that does have to do with what's happening in the North American space, of course, where their volumes are down about 10%. But even that 10% was actually slightly better than what the market had expected. The market expected worse than the 10%. And you did touch on the reasoning behind that. For a large part of a year now, they've been dealing with that boycott out in the US
Yeah.
for the yeah. Um, the good news for them is that because it's been going on for about a year, the base against which to compare their future earnings is now depressed, or their future volumes at least.
Okay.
So the chances are going forward on a quarter-on-quarter basis and on a year-on-year basis, volumes are likely to be up in that region. But the bottom line is that the fact that it was only down 10% was a positive surprise for the market. Across all metrics, revenue, EBITDA, as well as earnings per share, they did come in above market expectations. The one other thing worth mentioning here is that they did see record volumes in Brazil as well as in South Africa. So make of that what you will in terms of our drinking habits. Definitely, I think, a good result.
Yeah, indeed. Very, very interesting things to note there. Let's go into MultiChoice, because Canal Plus has just been moving in on MultiChoice and continuing to accumulate their stake in MultiChoice, where now I think they own 43.54%. Just talk to us about the impact of this accumulation and where we are with that potential deal.
Yeah, so it's been a busy few years for Canal Plus. I think the first time they bought a stake in MultiChoice was in 2020. They started off with a 6% stake. And ever since then, they've been accumulating their stake in this particular company. As you said, they're now sitting at 43.5% after having bought some shares in the open market over the last few weeks. And this comes while they are still dealing with the fact that they've put out an offer to acquire 100% of the shares. Where we are with that deal is that they're still currently busy with the circular that will then be shared with MultiChoice shareholders. Initially, that circular was supposed to be out on the 7th of May, but they approached the takeover regulation panel asking for an extension. They granted them that extension, and the new deadline is the 4th of June, I think it is, of this year. So by the 4th of June, they have to have that circular out to MultiChoice shareholders. And then subsequent to that, there will be a vote. But it wouldn't surprise me to see them continue to accumulate shares in the open market between now and then. just because they really do want this company. So, yeah.
All right. Well, before we get to your stock pick, two more company news, but you can take your pick. MTN Rwanda coming out with quarterly results there, tepid increase in revenue, but a lot of pressure on profits. And then you also saw Renogen coming out with a surge in revenue, but of course, I think as expected, experiencing a loss, and this was actually wider than the prior comparative period. Your pick over there before we go to your stock picks.
We can quickly touch on both. I mean, from a
Yeah.
Renogen perspective, the fact that losses were greater than last year is obviously not a good sign. What they did release yesterday, though, was the fact that they have started production at the helium production asset. This is obviously a project that has been delayed quite a bit over the last year. So the fact that they've actually now managed to start that production was a positive for them. But as you saw today in terms of their earnings, not so much, not so great at least. MTN Rwanda, look, MTN Rwanda is not a big contributor to the overall group profitability of MTN. I think it contributes around 2 to 3%. So it doesn't really move the needle from a group perspective. But yeah, I think from a numbers perspective, those numbers did come in below market expectations on both a revenue as well as an EBITDA perspective. But yeah, look, with MTN, everyone's watching Nigeria. Everyone's watching what's happening with that currency, as well as their plans to trade themselves out of a negative equity position there. I think, but marginally speaking, I think today's release is not a positive one for MTN. But like I said, Rwanda doesn't really contribute too much to group profitability.
All right. Well, where are you positioning yourself, your stock pick for today?
I'm going to go with Robix, construction company largely based in SA. Stable operating margins, a good pipeline worth of work. At the last reading, the order book was sitting at around 20 billion rand, which is quite healthy. It does signal that the likes of Sunrock, for instance, are starting to award a lot more work for the maintenance of the roads that we're seeing in SA, which is a positive for the construction industry. There's no balance sheet issues here. They've got good cash. They've got a commitment to return some of that cash to shareholders. They're even considering share buybacks. And I think most importantly, of course, the share price is trading at a discount to where we think it should be trading.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today. Andile, appreciate it. That was Andile Buthelezi from Sentio Capital.